Well, on the sidelines of the World Economic Forum at Davos, we are in conversation now with Maria Vassalou. She's head of Pictet Research Institute, Pictet Group, and on this very important day of the Trump swearing in and the Trump 2.0 regime beginning as well, amongst other things, Maria, thank you for talking to us.
Thank you for having me.
Yeah. How do you see growth in what increasingly appears to be a fragmented world, even as the theme of the WEF seems to be cooperation in a fragmented world?
Well, we have entered a period of what I call Cold War 2.0. It's different than what we have seen in the past with the first Cold War, because now we have effectively two alliances, one around US, the Western Alliance, and one around China, more recently really formed under the BRICS Plus coalition. The difference now is not a competition about political philosophies, but democracy versus socialism, but it's really all about growth and control of technology. And so there are different sources of uncertainty going forward, but also there is less cooperation in matters of security and peace. And that's potentially a very dangerous aspect of this time in our days.
Interesting. So the last 12 to 18 months has been obviously having its mind, one end of its mind focused on the geopolitical conflicts, which hopefully might come to an end, if not in days, then in weeks and months, if Donald Trump is to be believed, right? If that problem ceases, and if the real problem might be, let's say, tariffs, higher rates, counter tariffs, and a polarized world around trade, how big a problem could that be, or is that a solvable problem?
Well, so far, since the Second World War and since the end of the Cold War, we are accustomed to living in a world really underpinned by unfettered free trade, globalization, and peace. These three pillars of support are now no longer in place, or they have been challenged. And so I don't think that this is a temporary thing, but it represents more of a regime change in the way the world operates. I don't think that it's something that will end from one day to the other. Certainly, we're going to be facing increasing trade barriers, increasing issues with competition around technology, and we have already seen a few hotspots around the world of conflicts. The question is whether Trump will be able to really stop these conflicts, or whether they will shimmer going forward.
Okay. Now let's assume that for a moment, a hypothesis that there is some allaying around the geopolitical fears around the geopolitical side, but there are surprises in Trump 2.0. If indeed tariffs are surprisingly higher, and if they are followed by counter tariffs from all sides, and if that is inflationary in nature, which it likely will be, are we looking at a year wherein interest rates and therefore cost of capital might actually surprise on the upside? And what would that mean for a growth-starved world?
In my mind, tariffs is a tool, is a negotiating tool for Trump. I believe the priorities of the Trump administration are America first, the supremacy of the US dollar, and the dominance of the US in the technology sector. So long as it can achieve these three things, tariffs will not be particularly disruptive. So it's more a matter of negotiation. On the other hand, many of us are accustomed to living in a world of low to zero interest rates that were partly due to the the consequences of the financial crisis, but also a high level of financial repression due to monetary policy from around the world. That type of accommodation and QE, as we know, has been reversed. And so the expectation that we will be faced with very low interest rates going forward doesn't necessarily make sense. And we should expect the yield curve to basically rise and have an upward sloping yield curve with some risk premium in the long run.
Okay. Is that bad news for flows into emerging markets? Typically, lower interest rates will lead to that. Is that therefore, does that make the developing world slightly starved for capital, or not necessarily? Because you also hinted to two ends, right? Two blocks of sorts. And the BRICS bloc, if you will, is essentially the countries which are developing or on the eastern side and depend a lot on capital coming in from the western side.
Well, I think the emerging markets will still see inflow of capital, but the source of the capital may be different. So in the past, we had flow of capital from the West to emerging markets due to the West trying to take advantage of cheap labor and better production conditions. This may not be the case going forward, but on the other hand, you have the BRICS Plus coalition and countries like China and Saudi Arabia, the Emirates, and so on that are really looking to expand into emerging markets and view the BRICS Plus coalition as a conduit to achieve their goals. So I think there will still be sources of capital into emerging markets, but the source may be different.
Interesting. India is that one element within that coalition, if you will, which is thus far, to my mind, played the geopolitical balancing act quite deftly, right?
Yes.
What happens for a market like India, which benefits from a China plus one conversation, but at the same time is, quote unquote, to a lot of people's mind, a part of the BRICS coalition and therefore not necessarily on this side or that side per se, right? So what are your thoughts on this? And have you thought about India recently as one large nation which is kind of playing this act?
I think India presents a very interesting case. First of all, because it's a democracy. It's the largest country in terms of population. It doesn't have demographic issues. It has an educated workforce, and it has a lot of growth potential. So India has successfully played this balancing act, and I think that it is to its advantage to continue playing that. I would think that it will be to the advantage of the Trump administration to try to strengthen its relations with India. That, of course, would be at the expense of the relationship between India and the BRICS Plus. But India also has an interest in being a regional power in Asia, and there it can potentially extract rents by this type of negotiations and deft handling of the balance between China and the U.S.
If India manages to do that successfully, if you have an opinion on the investability into, say, markets like India, for example, or India specifically, because in Hindi they say that achhi cheez महंगी होती है, which means that a good thing is always expensive, right? And India is traditionally traded at a very expensive valuation for the growth that it provides. Now, if it manages to do this balancing act and grow well while keeping both ends fine, what does it mean for global capital coming into markets and choosing India versus other markets or other markets versus India?
India has the big advantage of having of being a democracy and having a more Western-like, a public sector and structure and so on, which is always appealing to the West. And that also means less probability of expropriations or other risks, political risks that the West may face in other emerging markets. So on the other hand, India also needs to improve the process of setting up businesses, dissolving businesses, cutting out red tape. That's usually always an impediment, and also improve quality controls, production efficiencies, and so on.
I've heard this thing about the ease of doing business for the last 10 years. You reckon progress is made, but not at the pace which it should be made?
There's always more to be done.
More to be done.
But
Okay.
certainly progress has been made.
Okay. You now I want to shift I mean, just one question actually. I mean, again, I'm not completely aware of how much you've looked at India in depth, but any thoughts on the policy making around India in that the Indian government has done in the last 10 years in order to get FDI aside of FII capital into the country? I mean, I hear there's so many headline announcements, right? Google making its largest headquarters outside the US in an Indian city. So many other countries doing that. GCCs or global capability centers setting up lock, stock, barrel into India. Any thoughts around policy making in India?
I think that will be part of the balancing act of the government and how it will position itself relative to the U.S. and the Western coalition and BRICS and China. So this is really where things will come down to the extent that the West views India as being more independent of the China-centric coalition. That will be most likely positive for attracting FDI.
Got it. Maria, last couple of questions. You recently did a video, right, on debt sustainability, particularly in the US. And so many people who look at, I mean, I think Ray Dalio put out this video when he's speaking about how cycles change politically, geopolitically, and superpowers on the downslide. That downslide is preceded by higher levels of debt, believing in the supremacy of that currency, etc. It smacks of what maybe US is going through right now. Not necessarily so that the end will be the same. But any thoughts on this? Because you've put out a video as well recently.
Yes. Well, US is in a very unique position, historically unique position, because it's not only the country that provides the major reference currency in the world, it's the country that provides the most liquid safe asset in the world, which is the treasuries, and these are necessary for the functioning of the global financial market. But at the same time, is the country that it's the most advanced technologically. And if you look at foreign investments in the US, they're not coming in only in the form of buying treasuries and holding the US dollar, but about 40% of US equities, if you add the public markets plus the private markets, are owned by foreigners. So there is a very close relationship between the rest of the world and the US. And so the rest of the world has a lot to lose from a US that goes into decline rapidly. And part of the reason that the US is so adamant about protecting the role of the US dollar and its leadership in technology is exactly that. It needs to stay a leader in technology in order to be able to maintain its attractive equity returns, inflow of capital, which also supports the value of the US dollar and the credibility of US treasuries.
So this time could be different.
This time could be different. That does not mean that the US dollar will stay the top reference currency forever and ever, but it's not very easy to dethrone it. And I think there is a lot of fear mongering in the news about US debt and the US dollar. This may be a 10-year story. I'm not saying that it will never happen, but it's not today's or tomorrow's or next year's story.
One last question on that, because China has tried to do the yuan as being the alternative, if you will, not quite succeeded. Now trying the BRICS currency way, I don't know what will succeed. But at the same time, the longest standing argument around the alternate has been gold. Now there is crypto making its way into the mainstream conversation too. What do you think becomes, or will it be a multipolar, multi-reserve a currency system that the world will get accustomed to?
It's interesting, all these efforts that China and the BRICS have made in order to bypass the US dollar. The only effect that these efforts have had so far is to bypass the US clearing system and therefore allow countries like Russia to bypass the sanctions imposed on it from the West. It hasn't really done anything in replacing the dollar. And actually, if you look at the level of transactions in yuan, they went from 1% of total transactions in the world to about 3.5%. This increase has come at the expense of the euro and the Japanese yen, not at the expense of the dollar. Now, the yuan has a long way to go to become an international currency. And before that happens, China will need to resolve its property issues that it's holding it back. And as long as it hasn't resolved these issues, it will not be able to open its capital markets and allow yuan to freely float in the global market. So that, in my view, it's a 10-year story, because they would need at least 5 years to clear up the issues with the property markets. And then they will need at least another 5 years to establish the credibility of the yuan renminbi as an international currency. If you look at the other BRICS countries, they have similar issues. So none of them is stable enough and is a producer of safe assets at a level that will make them credible alternatives to the US dollar. Sure. And gold, yes, you have gold, but we're not going to go back to the gold standard. That doesn't work. And a lot of the cryptocurrencies that have been used are only to make the transaction and immediately convert to US dollars or another hard currency. So it's really just an intermediate step. The same applies, for instance, with the use of stable coins. Most of the stable coins are really based on the US dollar. So yes, you trade on stable coins. You think you're not trading in the US dollar, but to make this stable coin stable, you need to have US dollar reserves. So you're not going around the US dollar in any way, only in name. And therefore, I think there is a lot of misunderstanding about this whole effort from the BRICS, and there is a lot of anxiety about where it's going to go. I think over the next 10 years, potentially, they will make progress, but it's not an easy step. And that's the biggest disadvantage of the BRICS right now.
So for now, the acronym TINA, which is there is no alternative, may stay for the dollar. Well, I would just love to know, you are, I believe you are close to writing a report on BRICS, yes. And this is a part of the Pictet Research Institute. Maybe just a brief mention on that, because a lot of our viewers would not know what Pictet Research Institute does as well.
Yes, the Pictet Research Institute is a new initiative of the Pictet Group. We launched it last year when I joined Pictet, and it's a very unique initiative. I don't think there are many institutes like ours around, because we are focused on long-term themes that could be of strategic importance for our business and for the asset management field in general. And as part of that, we do research on topics ranging from geopolitics, macro, to portfolio implementation issues. So in the coming weeks, we will be issuing a report on BRICS Plus and the implications it may have for asset and wealth management globally. In September, we issued our first report on U.S. debt sustainability and its role in the global financial architecture.
Wow, look forward to that note, because it will be a particular interest to Indian investors and wealth managers too. So look forward to talking to you then as well on the release of the report, Maria.
Thank you very much, Niraj.
The pleasure was entirely ours, and viewers, thanks for tuning in.
Thank you.